Hello, my French traders. Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. It is Thursday, July 28th of 2011, and we are looking at our Q's pretty chart. And let's do some technical analysis here today again. And check this out. Look what happened here today. We were trying to push it all the way up to that upper area of resistance right here, which you see here in blue. It was acting as a pretty strong area of support when we're still inside that rising wedge. And remember, support once broken becomes resistance. So that's what it's acting like right now. It's acting as a pretty significant area of resistance right now, but we never made it all the way back up here. But what did we hit? We hit the 8 moving average, which I mentioned to you yesterday. We hit it and we pull back down big time. So the 8 moving average is acting as a pretty significant area of resistance as well. So pay close attention to this. And according to the 8 moving average, we are in a bearish territory. We are below the 8 moving average. So things are looking bearish right here according to the 8 moving average, as well as according to that rising wedge formation that was confirmed yesterday. And what else do we see here? We are still making lower highs and lower lows. We made another lower low today, which it was at the 57.89 mark, and yesterday it was at the 57.94. So we are going even lower, but we are still closing above that area of support up here, the 57.90 mark, which is a significant area of support at this point in time. So what we need to pay close attention to tomorrow is again that 8 moving average, which is sitting right at the 58.93 mark, as well as that upper area of resistance right here at the 59.30 mark, as well as that area of support down here, the 57.90. So pay close attention to that, because if we break through the 57.90 mark and then close below it, there would be some more potential to the downside, all the way down to that next area of support all the way down right here, the 57.20 mark. And then the next one would be the big one, the red line here that you see, which is the 50-day moving average, which is right at the 56.91. So pay close attention to that as well, and keep all of the areas of support and resistance here in mind. And look at this. The MACD is still pointing lower. It's still getting closer and closer to the zero line, which is right around the corner. And we are getting another negative tick, but a slightly lower, like smaller negative tick today. Yesterday was much bigger, and today was much smaller, but it's still a negative tick. And we're close, really close to the zero line. So remember, if we break through the zero line and we enter into a bearish territory right below, then we could be in big trouble. So watch for that as well. And look at the volume. The volume is still pretty high. It's not as high as it was yesterday, but it's still pretty high. It's sitting right at the average right here, but it's slightly tiny bit below the average, but it's still considered high comparing to those little bars right here. So things are still looking a little bit bearish, but watch all areas of support and resistance here tomorrow, and also look for confirmation with the MACD and pay close attention to volume as well. All right, so hope helps you. Have a wonderful evening, and I'll see you guys again tomorrow.